Good turnaround Tuesday, Warriors. How's everyone doing today? Mike, how are you? And AJ and Ryan, welcome back from your holiday. And Steve and Ingmar, you're doing okay. Kman's with us. RJP, how are you guys? Everyone's doing okay? All right, so first day of the two-day Fed meeting, right? So let's take a look at some things here. We have Ryan back. He's well rested.
Don't know about that.
What did you do on May Day? Did you I was thinking that maybe you guys like go around a pole with ropes. Is that a
Maypole
May Day
dancing.
celebrate? Huh?
Maypole dancing.
That's what I was thinking of. Maypole, yeah.
Yeah, but everyone's doing that. It's all in the streets and yeah, with their knotted
Uh,
hankies on their heads. Yeah.
yeah. All right. Well, metals are strong again. Silver's outperforming today by quite a bit. So gold silver ratio, I still think it's going to attack the highs. Gold just coincidentally, I'm taking a shot here. It's 61.8 back. Already taken some partials, but I think it's not a bad area to try it. We'll see what happens if if this is ABC for A, and we're getting a B here. A C could be $300, and if it's a fib extension, it could be more. So. Or I could be all wet, and we did have a confirmed high on the four hour up here, and we could still blow off. That's why I'm using a $25 stop. Okay, I mean always have that stop in there in case you're away and some big news happens. So I'm
Screw
getting
that, man.
using.
Let's freewheel it. Let's free ball
Yeah.
it, buddy.
Okay, I'd like to free ball this euro. It's really takes a lot of patience to either be long or short here. So I guess the Fed's a decider tomorrow. We'll see, but you know, I guess you go with the trend. You'd be buying this stuff. Maybe they've shaken out enough people, and the most bullish thing the market could do is when it gets overbought like this is not give up the retrace, but just work off the overbought condition moving sideways, which is what it's done. So we'll see about that. Boy, was that a short at 46. Let me start with Ryan. This looks like we're going for that 140 low here, bro. What do you think?
Could well do, mate. Could well do.
Yeah.
I haven't really changed my mind from last week. I still think we may be in buy the dip mode more than sell the rally mode. Not that it's looking that way at the moment, but I think I keep
It's a tough
using this.
call here.
I keep using this phrase. It's like the Newton's cradle approach. We had that big down move in April. We've had a decent
Yeah.
bounce. Either side needs fresh news to either make new high, carry on going higher, or make new lows. And if you don't get that, you're going to build into a wedge or something. And I think that's potentially what could happen here. But that 142, 141.70 is my level still. If we're breaking through there, then yeah, you're probably going to be taking a look at that 140 lows again.
Okay. We have S&P is lower 2 days in a row. So far stalling from 5,700, and it tried to rally intraday yesterday. I think that it was the last hour or so, it was backed unchanged, I think, at one point yesterday, or even a little higher, and then came off and yeah, looks a little heavy here. This 5,700 level, I thought we'd go 58. I still don't have any shorts on and any individual equities or anything. So not sure what to do. I think I'll just react to the Fed tomorrow on that. But one thing of all these stocks, Apple really does not look good, and I think we're going to 150. I'd love it to hold one more time, but 170 was an old objective of mine, which is where we got on Liberation Day, and it's pretty classic. It just rallied back halfway, right? Got back to 214, and now it's starting to roll over. Does it have another shot back up? I don't know, but this looks just like we had this straight line move and we corrected back to prior lows and we're heading down again.
I've got puts on Apple, Dale. They expire in September, but I really am skeptical about like they're moving so much of their supply chain manufacturing to India,
Yeah,
and
to a war zone.
yeah, I mean it's gonna I think that the company's gonna suffer. That's just one of many things, but yeah, I think the stock looks like shit.
What
So
strike price?
I have to go back and look.
Oh, okay.
I bought them no, not yesterday, last week,
Yeah,
but I think it's like where are we at right now? Where are we trading?
198.
198. It's probably like 170s or 175, something like that.
Okay, so here's the 150 target off this speed line.
Yeah, I heard what you said, and I'd be happy with that.
Yeah.
That'd be great.
So yeah, so that's the weakest one. Okay, because Amazon, a lot of these are still weak, but that was the week, in that week of earnings, that's the one that did not perform. So I mean, here's it. Here's Amazon. Doesn't look so great. Just rally back to resistance. Look better over 92. Here's Meta. That looks a little better than Amazon. It's still just could be corrective. All of this stuff could still be just corrective after the smash. Google too. Can't take out last week's highs yet. Netflix has a real weird formation. Had these kind of days here. This looks like a short
Well,
too.
that was because everybody was wondering if Netflix was going to be tariffed for all these international
Oh,
movies, and then
yeah.
obviously everybody just bought it up at the open yesterday. But take a look at PLTR. They reported earnings yesterday.
Palantir, they're at new highs, aren't they, Palantir?
Well, look at the pre-market and look at the big rejection of it. We hit all-time highs yesterday after the close, and then reversed. I don't know, we're down $10 or something, something like that this morning.
I mean, here's my
But,
narrative. If we're going to fail from here, Blake, in the S&Ps and
mhm,
things like Apple, and this is what still bothered me, kept me out of the rally all the way because of a confirmed low here.
yeah.
My narrative is that we do have one more break, and that we take out 4,800, maybe trade 47 to 45, and then turn. So we'll see. This event, I think, has to be revisited. I think it has to be. I think it was a 3 sigma event or something like that on the Richter scale. I don't know what the sigmas are, but I heard someone say, it's happened
I mean,
four or
and
five times. You
it was
know,
pretty impulsive, right? So, I mean, it
yeah.
was a pretty big move, and we've seen this song and dance enough that I agree with you. I don't disagree with you. That wasn't a V-shaped recovery. That wasn't a V bottom. That was just more of it's just been a short squeeze. It's been fairly convincing. You got people like Tom Lee who says that because of Bitcoin price action, we're going back to all-time highs.
Right.
Again, Tom Lee is somebody who, yeah, you're great in a bull market when stocks only go up, but when you start seeing two-way price action, people like Tom Lee from Fundstrat, it's where his inexperience is going to start to show up.
Well, he needs to start listening to his employee, Mark Newton.
But when you think you're at the top of the world and you're in your late 30s or early 40s and you think you've seen it all, you haven't in a bull market that's been nonstop since the dot-com bubble. I mean,
Yeah. Yeah. All right.
anyway.
So let's see what else is going on. Greg made a great pattern and play on the short side of crude. I just want to show you guys what crude looks like, though. Um, I wouldn't be short anymore. Maybe we're going to have a 3, but this kind of smacks of an exhaustion gap. This was done on, and I don't know why. with weak prices that we've already had, right? And we already had one OPEC increase of production. And then we had an announcement on Friday of another increase in production. Uh, people are saying, well, they're just going for market share. I don't know why they would just keep increasing production with the market being pretty weak. Any thoughts on that?
Why?
Yeah.
Because they want to knock all the shale producers out of business.
Okay. They've done this before.
Yeah, I mean, but if they can suppress prices, then it's just going to,
Yeah, there's no drill baby drill happening here
no.
at $50 crude.
Right. Like if I was the Middle East, I would be pumping the shit out of oil right now and driving prices as low as possible because they can sustain low prices longer than the West can, more than the United States can.
Yeah.
So why
Yeah.
wouldn't you? I mean, why wouldn't you? I mean, my opinion.
I
So,
guess. I mean, maybe they're going for market share and they want to knock our producers out. I mean, they need
yeah.
$70, $80 oil to even think about going out and developing new projects.
Yeah, they
So,
know where our break evens are. So like, drive crude oil to into the 40s and leave it there for the next 2 years and see how much oil the United States is producing after that. It'd be
well, I mean, this is done at
nothing.
President Trump's behest as well, right? He wanted lower oil prices. I've heard a narrative that they're taking oil prices down. So when there is a military strike against Iran, it's not starting from $70, $80. It's
Yeah.
starting from down here.
Yeah.
Anyway, we'll see what happens there. And wow, look, platinum's lighting up. So the white metals are acting a lot better. There's platinum. That's it even shook out. Look how it shook out everyone down here. I know this is something that Tracy liked. She may have been a cycle early, but she said it was a range, 900 to 1,000, and we came back down here and look, probably took out people here. So this looks pretty good. Um, Silver looks better than gold today. It's up almost twice as much, up 2%. So, you want to take it away, or I want to bring Kman in. What are you doing with your yen crosses? Must be performing pretty good with the yen coming off like this.
Yeah, the yen is the yen is coming up. No, actually, I was long Aussie yen yesterday, but I let it go not too far from where I was long because I didn't trust it anymore with the yen behaving as it did. But quite a few of them are not too far from decent support now. So it's all going to depend on what the yen wants to do further. But we are at or not too far from relatively decent support, whether it be Aussie yen, Kiwi yen, sterling yen, for instance. We are not too far from those supports. So it could be a case of trade yen and don't really. I mean, the yen is going to be the driver, not the other side of currency pairs, because you look at the dollar yen not too far and all those yen pairs. So it's really a yen thing. So it depends
Yeah,
what.
because there's no movement going on anywhere else except,
Well,
that's a
cable is
nice,
better bit. There's
yeah,
some of
cable.
those discussions going on between the UK and EU. I think that is what is supporting sterling right now. We had a pretty decent drop as well in the euro sterling. So
Yeah,
sterling
it's
crosses
a
are holding very
pretty
well as well.
lousy, pretty ugly candle
On the what?
in euro pound.
Yeah. I'm a little disappointed I didn't really try it right now. But okay, I mean that's you can't win them all, as they say.
There's always another one, bro.
But the thing is, and to come back on the metals,
Yeah.
I'm the other side again on gold. I did buy it very late last night just because the Asians are just continuing to buy it all the time. But we are in a very decent resistance area. I just wanted to point that out. So anywhere between 33.75 and 33.90 is pretty decent resistance on gold. So we have to watch what the Asians do with
So
it.
are you taking profits on it up here?
Yeah, I did already take half of it, and then wait to see whether it breaks or goes back
So
down.
you're not on the other side. You're
No,
neutral. You're not on any side.
I'm yeah, no, I'm on.
You're flat. Flat means you're not on any side.
I'm on my side most of the time.
And I'm beside myself. So
Yeah.
all right. Let's see. We may as well. I have Luke. We have Luke Groman today.
I still like the Kiwi though.
Okay. All right. Still likes Kiwi. I mean, Aussie's been pretty stiff. You know, I keep thinking there's going to be a chance down here to buy it, but
it's
not yet.
Lagging again, huh?
Yeah.
Pretty much.
Dixie, maybe that was it. Yen, maybe that was it. Weak dollar, again, weak stocks. Keep that in mind.
Yeah.
So if they could turn the dollar with the Fed in the next day or so, they could also rally the market. So it's, it's great that we trade FX, it's becoming the center of talk on even conventional media. They're talking about what's happening in currency markets. And I've never heard more talk about the dollar. How the dollar is, falling apart. It makes me not want to be on the short side, but it's becoming pretty much when the guy in the street or people start asking you what's wrong with the dollar, and it probably is a little late to be aggressively bearish for a while. Maybe there's a correction, but we'll see. I think it's all boiling down to the press conference. Right, Ryan?
Yep, absolutely, mate.
Yes. So do we have a guess on what he's going to say? No clarity. I can't do anything type of message.
Yeah, I think so. It's going to be the walk the fine line again. What the question is, what can he do? What can any of them do at the moment?
Yeah. Well, let me ask you, I think that with the numbers that we had on inflation, that I think the president, if is going to, he's calmed down about Powell, but I can't believe that there's not going to be a comment if he doesn't do anything at this meeting. I don't think that
Dale, your microphone went kind of
off.
Quiet. Yeah.
Better.
Yeah, I think better now.
That's because I was moving around. Anyway, will the Fed and the Treasury are on the same side of this war against China? They will support the market and give Trump more time. Okay. All right.
Yeah, well, Trump's going to have a go if he doesn't cut rates, obviously.
Yeah.
That's his line at the moment. But what can Powell do? The data is still, the hard data is still not falling off a cliff, as much as people are still expecting it to. And even the ISM yesterday was solid. So what reason has he got to cut right now? Nothing really, with all the uncertainty. Inflation's edging now towards target, but that still may be upset. So it's the thing you got to ask yourself is, take Trump away, would the Fed be cutting now anyway? Without Trump, would the Fed be cutting? And you can apply that to a lot of central banks. Take out the geopolitics, and what would that central bank be doing at that time? And that gives you a bit of indication which way you want to go if this sort of stuff gets resolved.
Okay. Well, I mean, tariffs wouldn't be in the equation if he wasn't the president.
No, but then look at the Eurozone economy. It isn't weak because of tariffs. It's been weak for 2 years.
And that's a great point. A lot of people forget that because the market was still making new high after new high, that there were cracks in manufacturing and
a lot of different
crap.
in
Yeah.
in the US for 2+ years or
Yeah.
whatever. You know,
Yeah.
that sector's been down in the dumps, and that shows you it doesn't matter what they do with rates. There's probably something more going on under the hood.
Yeah. Yeah. Well, you know, I have some great questions to ask Luke, especially since, you know, Luke has been advocating not being in bonds since he started his letter. And I think the bonds are at a critical spot here. And um, I want to see what he thinks. You know, if you've been long bonds, put up a TLT chart if you have one,
We'll put it
Blake,
up right now.
put up a weekly. And really, the Bears and the Bulls haven't really been, you know, doing too much. That's TLT right there. Okay.
Yep.
So it looks like, yeah, it's missing a third drive. So 1.27 is 7708. And that 85 level is big. It's been holding for a long time. So this is a long-term chart, 03. But if you know, look at what's happened, it's really been 2 years in this range between 85 and 100, right? So we just tried, you know, if it resolves to the downside, cover it up. What kind of target would you have? Like, how would you target a breakdown on this
I would
TLT?
do this. So you take this low to this high on a weekly basis. So the 161% extension comes down to 70. So your last drive should look something like this, somewhere in this vicinity.
You know, that's my, you know, but that's where my third drive line comes in. So
that would make sense, right?
confluence. Yeah.
Be like this, right?
Yeah. Yeah.
Yeah, I mean, and you
So,
do this, and then you get a big freaking rally
yeah.
like you've never seen.
Yeah.
And that's the rip your head off type of rally, and that's when
You
you know.
panic, everyone. There'll be such a panic
Oh
if the
yeah.
bonds trade down there. And there should be plenty of damage in markets
Oh
if
God, that
this
would be
happens too,
that would
right?
that would absolutely destroy markets. But it would be something that would be epic in the end of a cycle type of move, you know?
Yeah.
Like you imagine what's happening, like panic,
Yeah.
panic at the disco. You
Yeah.
got stocks going down, bond market going down, maybe even the dollar, gets destroyed, and
Yeah.
then
Dollar will go down with this. It's
you
not
know,
going to support the dollar, these
yeah, I don't
rates.
know. You would think it might, but anyway, yeah, I don't know.
Yeah. Anyway, so that, I mean, I think that's the most important chart on the board right now.
All right. Well, that's that could be a really, really interesting move. Hey, I do want to ask maybe I came in, you were just in the chat room. This is the Forex Analytics chat room, guys. Obviously we're talking about all sorts of different things, but there's a German election right now going on, and that's having a lot of influence on the euro. Um, Gerard here in the chat room was just talking, and then you were responding to him. What are your thoughts on this German election, and how influential is it going to be for the euro?
Well, apparently they will have a second vote this afternoon. And my understanding was that if that vote does not succeed, the one with the most votes, in this case, Merz, will still be asked to try and form a government through negotiations. And if that doesn't work, then of course they should go back to new elections. If that would be the case, then I think it's going to impact the euro and European, because I mean, one thing or not, even their economy being rock bottom, it is still the biggest country, and supposedly the engine of Europe. So if it goes wrong in Germany, it should not be good for the euro. But I personally think we're not right there yet. There is one, two stages before. Um, Really it would get to the worst situation. That's what I kind of understood of what is happening there. But Gerhard is probably German himself, and looking at the name, and perhaps he knows more about the details than I do. But At least that's what I understood. So second round of vote likely this afternoon, and then if that doesn't work, then Merz may want to or may try to form a government through discussions. But even if the second vote does not, if it doesn't succeed to have the majority, it may already affect the euro perhaps a little bit through crosses also, because euro dollar, whether we want it or not, it's a bit stuck, right? Top and bottom of the inside ranges, but nothing breaks for now.
Gerard's actually he's actually responding to you in the chat.
Oh, okay.
Yeah, and right in our show chat. So thank you very much. And Ryan, did you have any last minute thoughts about German election?
No, not really. It's
Okay.
just another shit show in Europe.
All right. I've been on meetings this morning since like 3:30, so I'm kind of still getting my head wrapped around all the different themes that are moving the markets today. One of the other things that I did want to talk about though is I wanted to talk about this move that we're seeing in the dollar mex. I know Kman and I were just talking about it in the chat room. It's something that I mentioned every week ahead video. I think the last couple of weeks, I'm just waiting to sell this thing, at the breakdown point. It's a big, this is a big, as you all know, it's a big rounded top. It's just, I was actually, I was telling people in or in the Morning Edge show yesterday, which is our show for Forex Analytics traders. I have one of our family friends. Their family owns like a olive farm here in California, and they do all this stuff. And I always talk to the mom. She's always like, "Where's the peso going?" And I actually was just texting with her yesterday because they're moving a lot of money back to Mexico. I'm like, "Yeah, keep buying pesos right now." And the reason why I'm telling you guys this is because I'm telling my friends and family, friends of family, you know what I mean? Like, I still believe that Mexican peso is going to be trading down sub 19, later on this year. So I think these are great opportunities to be on the short side, and I'm hoping I get some fills later today. While we're below this 200 DMA, I'm going to continue to stay bearish. But we should watch it because it's not acting like you would typically expect when stocks are under pressure. And speaking of which, one of the big things about the S&P, that I think we need to talk about is that everybody and their mother's, brother's, uncle's, sister's, nephew's monkey is trying to sell this 200 DMA, this 5,800 level right here. Well, if everybody's trying to get short, a lot of times you're going to end up getting stopped ahead of there because there's so many sell orders just stacked up at these levels that you can't chew through them. The market can't chew through them. And next thing you know, you got something that upends the market. And right now, I believe that's where we're at. I think so many people are trying to get short up here or sell into this rally, especially the ones that didn't, buy, didn't panic and sell here. They're looking to sell up here. A lot of people that were buying these lows are, trying to get out. And I think a lot of the people that miss selling up here are trying to sell at current levels. So I'd be very, very careful with this market where we're currently at. I wouldn't want to be on the long side up at these levels. We have a couple of minutes before Dale takes over with Luke. And Dale, you're probably going to be looking for Luke right now. But Dale, what are you going to be looking at today before you go off searching for Luke Groman?
Well, I'm already in a gold trade.
Oh, okay. You
It's
were
enough for
talking
me.
about that when you first came on. I didn't quite catch
It's
it, but
okay.
what are you doing with gold?
So I'm selling this 61.8 retrace and see if we could get a C wave. I had $5 intraday. I took it and I have a $25 stop on the remainder. And I did it at 33.80 and a half. So we'll see.
Okay, so you're basically you're selling this move. You're shorting it
Yeah,
right here. Okay,
yeah.
that makes sense. I mean, hey, that's the best intraday risk reward you could get right now. If you shorted gold, you know exactly where you're wrong, and that's as a trader, that's all we really care about, right?
Yeah, I don't know if you never know if it's going to work. All you could
No,
do
but
is,
risk
what
manage.
do I say? Probe. You probe and have your stop in, and then you take partials. And
Right.
then the other P is you protect the remainder. That's
Simon
it.
just wanted to make sure he knows that, Simon, you are on Jumbotron. So good morning on Jumbotron. MRBH says Mert's second vote. It'll be this evening. Okay. Ryan, what are you looking at for today? Anything in particular before we bring in Luke Groman?
Yeah, I've given
Groman.
Aussie dollar a tap at the 64.40. It was hitting that as support. Like Dale, I'm giving it a probe. I just hope it doesn't probe me back.
Oh, so
Yeah,
you're
those
trying to
probes.
buy this sucker.
Yeah.
Look at you all bullish commodity currencies when the market's getting shit on. That's awesome. Good for
Trading off
you.
support, mate. Former resistance,
Hey,
strong resistance, now support. There you go.
look at the big balls on Ryan. All right, I like it, Ryan. Kman, what are you doing today?
Blake, you're such a Marine. You can't take the
Ah,
Marine out of you.
Hell no, buddy.
I'm, as I said, a little long gold. I'm actually scalping long sterling a little, but not holding too much. For the rest, watching the game, having a beer. No, I bought Euro Swiss as well, just on the back of those SMB comments. But that's a grand pass position. That's yeah. I mean, yeah. I'm probably going to carry that for a while if it holds.
That I did not have the stomach to buy it yesterday when it was
Yeah, but
down here. But
they came out
yeah.
with comments before you came in this morning. So
Oh man, that's shit always happens when I'm sleeping. All right, well, thanks, K man. That was a nice pickup. And guys, I just let you guys know I'm buying. I put in a pattern in play for the euro last night. It is actually a harmonic pattern in play, believe it or not, right here. And you can see when it was trading at sub 113. I'm long euros here, and I'm looking for a move, through 114 and possibly up towards the high. So I'm long a full position in the euro now. So yep, there it is.
The correction's over.
I think
Yeah.
it's had plenty of time to go down, and it's just not
Yeah.
going down. The dollar's
Yeah.
probably going to be under pressure again. So anyway, guys, make sure you take advantage of the liberation offer. Remember, we've backed up our prices about 5 years. So $3 a day, you're in the Forex Analytics community. You're having conversations about German elections and what's moving, and you can even be like Simon and be on Jumbotron today in the Forex Analytics chat room. This is where all the action happens for all of us. I mean, this is just over the last hour. You can see it all here. So anyway, Dale, have a great interview with Luke. Luke, glad you're here because there's a lot that you guys are going to be talking about, and I'm excited to hear this interview. So thanks, everybody. Thanks, Ryan. K-Man, Ryan, great to have you back off your year and a half long vacation. Really nice to have you back.
Thanks for
Cheers,
dropping
mate.
in,
You
Ryan.
you keep harassing me about having Thanksgiving holiday. I will harass you about all 432 holidays you have in the UK every year.
That's all right. Got another one in 20 days, mate, just so you know.
As long as it's not a bank holiday, guys.
Right.
We don't want any of those, right, Luke? All right. So thank you, team. Great job.
Thanks, Coach.
And it's great to have you back, Luke. Luke is the publisher, editor of The Forest from the Trees, and he's done a great job over the years. That's why his popularity has grown. He's helped a lot of people in these confusing times. So, Luke, when you were last here, you were saying we told the Chinese we don't want your money. Okay, and that was up here while the market had not even peaked. And you said I would sell Qs and maybe look at industrials. And uh, the dollar and the Qs did the same thing. That was a great call, and it was at the top. So we bounced back. That's not the Chinese coming back in, is it, Luke? Do you think, or it's just like a technical bounce?
No,
This recovery.
I think it is I think it's partly a technical bounce, but I also think it is, there's been this discussion amongst the trading and investing community. Where is the best put? We found it. The best put is the best put is Treasury vol. So if you call up the move index, on that chart,
Okay.
if you call up a chart of the move.
I have it here.
Oh, you just had it. Sorry, it was down there. I just saw it. Right up.
You know,
Right. Yeah, right there. Stop right between Lennar and
Oh yeah,
Exxon
move.
Morgan.
Okay. Thanks, Lou. All
Yep.
right, so he got what he wanted, and I'm going to go the bonds right now because that's really the big story, I think. Probably always has been, but is in your view, is it becoming more? Because I want to talk about this technical action that I'm not a fundy guy, but the technical action was it said danger, danger to me. Um, I know the move has come off, but it looks like a double top. We could rally again. We're putting in higher lows on this move. So whatever solutions they're getting so far, they're just temporary, right?
Yeah. Oh, it's they're papering over it, and ultimately, um, you can take that chart back 5 years. You can see every time the move hits 130, 135, they
Yeah.
panic. They inject, and it's so there's this view amongst traders that Besant is different than Yellen because Besant's a trader and Yellen's an academic. And the reality is the markets are telling you they're not. They're the same. And ultimately, with that, it's very powerful because we know if they're not going to let the Treasury market dysfunction, it's extraordinarily powerful. So it tells us, yeah, you could have long bond yields go back to, I don't know, 4.5, 4.8 on the 10-year.
Okay.
But it's very powerful from a trading perspective because, yeah, I think we'll probably go back to the lows there, but I don't know that we'll go through the lows on the TLT
Okay.
for that reason, because it's very simply the U.S. government can't afford the interest rate above that. And the bond market starts to dysfunction. And then, there's a huge geopolitical side that I don't think people are
I
positioned,
okay.
which is
So you want to bring up like Japan using their $1 trillion treasury bucket in the negotiations with the U.S. They've dropped that though, haven't they?
they drop that. And I don't even think it's that. I just think it is the issue is U.S. debt to GDP is too high. And so the U.S. debt in these negotiations with China in particular, but the whole world, we just showed ourselves to be an MMA fighter with badly broken ribs. And so we can be tough guy, and then they're going to punch us in the ribs, which is the bond market, and we're gonna need a break.
Okay.
And ultimately, it's super powerful, I think, from a more longer term structural perspective, which is that the U.S. does not have the leverage that consensus thinks the U.S. has. And so then I think we have to start saying, okay, well, what does that mean? I think it means a much weaker dollar. I think it means much higher gold. I think it means, you know, and trying to manage this treasury issue. It's a very interesting time.
Okay. Well, I look at what happened here, and I'll just cover up the title of this chart, Luke. But really, we've gone nowhere in a year and a half between 95, a little spent a week above it, but pretty much we've been in 95 to 85, this range forever. Okay. Um, Now this day that Paul came in and said they would provide liquidity was another test of the 85 level. I don't know why my dailies aren't showing, but let me try and pull it up again here. Auto fits. Huh. I lost data on it. So
But that's all right. I think that chart, go
okay,
back to that chart.
this is it though, Luke. This is a day. This was the people are saying this was the what was it? It was a trade that people had on the wrong way over a basis trade.
The basis
Do you
trade, yeah.
do you believe that this was all because of a basis trade?
In no, I think it was a lot of it was the basis trade being unwound, and I think people are still missing the most important implication of that, the second derivative, which is why is there $1 trillion basis trade? And the reason there's $1 trillion basis trade is there's not enough buyers at prices the US government can afford for bonds. And so one of the biggest marginal buyers of treasuries in the last several years has been this basis trade. And the problem, that's fine, but the problem with it is that you now have the most powerful government in the world, in theory, financing with the equivalent of monthly payday loans with hedge funds who need to put up monthly numbers. And the way their business works, as you guys know, is if you get a spike in volatility anywhere,
Yeah.
their risk managers are going to tap them on the shoulder across the shop, and they're going to sell treasuries. And we've seen that over and over. And so, when you go back to that chart, the TLT, the long bond ETF, go back to the 5-year chart that you had up.
Okay. Weekly.
Yeah, go back to the weekly. I think it's super powerful. That range, you were saying we've gone nowhere since 23. So in November 2023, with that thing breaking down, Yellen shifted all the issuance
To the front end.
to the front end. But when I see that chart, that's yield curve control. And what if I told you that in May 2024 was when she started the buybacks? And then what if I it's a really interesting study. Take a look at what the price of gold has done since the TLT has gone nowhere.
Yeah, exploded.
It's up about 60, 70%. Take a
Yeah.
look at what's happened to Bitcoin since the price of TLT has gone nowhere, which is yield curve control light type action. It's gone to the right. Oh, look at that. So gold from gold's gone from what? 1700? Gold's doubled.
Yeah,
Gold's up
1800.
100%. Yeah. Why is gold doubling while TLT's going nowhere? They're proxies for each other. And the answer, when you sort of rule out the impossible, they're managing the yield curve. They're managing the long end. And the liquidity showing up in gold, liquidity showing up in Bitcoin, liquidity starting to show up in the dollar. And that's why the basis trade, right? The basis trade exists because there's not enough buyers.
So there's liquidity. I mean, the spreads, the T-bond market, I remember the futures pit at the Board of Trade, and you didn't even have to pay a tick to get in and out of a bond trade.
Oh yeah,
it was the tightest. It was the tightest spread on the street.
Yeah, and that was trillions and trillions and trillions in debt ago, right? I mean, that was, not trillion. People say it's the most liquid, deep market in the world, and the reality is all of the what we see on our screens tells you it's not, and what you see fundamentally. I mean, look, Fed has not sold a single 10+ year Treasury on net off its balance sheet since 2010, on net. And so if it's such, and oh, by the way, that was during a period of time when the yield curve was inverted last year, for the longest ever. So in theory, right, the ducks are quacking. Yield curve's inverted. They could have dumped most of that position. Why didn't they? I think I know why.
Yeah. They were dumping MBS. They were done in the QT. They're still selling MBS and selling less treasuries.
Yeah,
Q2,
and
right?
and I think ultimately the answer is they can't do it without sending yields to a level that create a debt spiral, that create a crisis. And that, I think that's probably 4.8% on the low end on the 10-year, and I think 5% at the high end. I think you get the 10-year, I mean, empirically, we've seen 10-year 4.8 to 5 is a problem for everything.
Okay. I think we could go there. I wanted to ask you, I was reading that there's a huge rollover that has to happen in 2025 for treasuries. I mean, you look years out, it's not bad. But this year, for some reason, there's a huge rollover of debt. Is that true? Have you been talking about that at all?
I've not spent a ton of time on it. There have been a lot of people who have. It is true. I don't know the exact breakdown. I want to say it's like $7 trillion, something like that of roll. Yeah, it's a lot.
That's a problem, isn't it? The roll.
It's all relative, right? It's if the dollar's too high, it's a big problem. You need a weaker dollar to get it done, basically. You need the dollar liquidity to get it done. And so we're seeing signs of that with some of the Asian currency action at the right price of the dollar, at a high enough price of gold, so to speak. The roll shouldn't be a problem, but it is dollar sensitive.
Okay,
So
well, I'm going to give you my technical case, and I'd like you to come up with the narrative that would drive it there. So,
Sure.
okay, so this 85 level, you know how key it is. It's hit there a million times. And then this was the day the Fed said, we'll provide liquidity. I think this was an intervention day on the bonds. That's when both the market and the bonds were down and they recovered. Paul made some statement and they recovered. And if I cover up the title and I don't know it's the bonds and I'm just a trader, I go, wow, that got from here to here in a blink of an eye, and that this recovery is just corrective, and that we're due for something like this. And next time we take out 85, it measures down to 70, just arithmetically. So that's where I think, initially 78, back to the October lows back here. But what would be the narrative to take the bonds down to TLT down to under 80 in this environment? What would
In this
happen?
environment, yeah, I think it's two things. I think it would be data, like we can see very clearly, and we've been writing about this for clients. What we now have a setup of is COVID economics 2.0, right?
Okay, yeah,
We've got a Treasury vol being suppressed by Treasury and Fed. They're not we can see that on the chart. We can see that in the comments. And we've got an interruption of supply chains. And we've got a government running a $2 trillion plus deficit with a slowing economy, which means the deficit's going to go up. So yeah, you could get, some sort of weaker dollar, higher inflation print, higher deficit print, supply chain disruption, big deficit. Like those are the things, you kind of run through those. Are like, oh, that makes me want to sell bonds. That makes me want to sell bonds. There is in that world, we know from COVID 1.0 economics, what was the trade? Short bonds, short dollar, buy gold, buy Bitcoin, buy stocks, buy inflation.
right.
And it's the same setup. And there's a kicker this time of if we start to get those kinds of prints in the next month or two, or we start having shortages in the United States of America in the next 1 to 2 months, I think there starts to be, like a
Confidence
revenge and
crisis.
anger, the anger trade,
No,
the revenge
oh,
trade, right?
there will
Like
be. If I can't get my simply watermelon juice, I'm going to be pretty hard to deal with, Luke.
there's,
That's my
and I joke about it, and it's everybody's on one side of the boat right now, which is
yeah,
hashtag America. We can't win. The Chinese are going to lose. What if we wait
yeah,
1 to 2 months and you've got dollar down, inflation up, interruptions, big supply chain disruptions, and a slowing economy and bigger deficits? So Doge didn't work either.
yeah,
That is like wrong, 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 wrong. And everyone that's wrong has to get right. And when they want to get right, they're not going to do it, hey, scale me over the course of a day. They're going to be, want
yeah.
to have half done now, half done.
GMO,
Yeah. Yeah.
GMO, get me out.
Get 'em up. Get me out. That's right. So
Okay,
that would be the narrative that would fit that. Now, that's, within that, we have to keep in mind that move chart, right? I would always be
yeah,
checking against that move chart because they are going to suppress vol. But yeah, it could get a little messy.
yeah. They're not bigger than the market. Not on the long end. They're not bigger than the market, are they?
Well, they can be, but they have to choose, right? A choice is about to be forced on them, which is you can save the bond market or you can save the dollar, but you can't save both. And that's the classic choice that all emerging markets have always been forced in our position. And we've never had to do it because we've had the reserve currency, the way it's structured, capital flows here. But remember, go back to what we started off the conversation with. The Trump administration's policy is take your capital somewhere else. So all of a sudden, we can have some version of that happen here. And there isn't probably 1 in 100 traders that's ready for that if it happens because they've never seen it in America.
Yeah. Yeah, we've never really had a big credit crisis, have we? Even in the Depression, what happened to our credit rating during Roosevelt? Did we maintain it? You're a student of history.
I don't know about the credit rating, but we devalued also, but we were the last to
Oh,
devalue, right?
oh, right,
Um, and it speaks to, you hear Bessent saying it over and over. Well, we're the debtor in this situation. China's the creditor. So we saw from the Depression, it's the creditor who has the worst problem. And like he should know better because
well, yeah,
it's,
he-
yes, and the debtor has hyperinflation. Like you look across Europe, the five biggest industrial powers in that time, two of them hyperinflated
right,
and three others devalued massively. So like, yeah,
yeah. So maybe it'll be the other way around. This time we don't
I think
deflate, right?
I think
Yin
that's the
yang.
message, right? If you call it the Chinese 10-year against the American 10-year, and obviously China doesn't, open capital controls and what have you, but those bonds, the bonds are doing exactly what they should, right? Our yields are going up and their yields are going down.
Do you think China's going to? I really don't think they're going to do a deal until um, uh, President Trump makes a gesture to bring down tariffs, and maybe they won't even. Maybe this is their opportunity to do what they've always wanted to do to dethrone the U.S. Xi doesn't have to face elections in 26. Their population, sure, they're getting hurt with manufacturing job losses, but I think they hold the cards and be able, as far as not having to blink. And I think they just want to let them twist until the end of the deadline, the
I
extension.
think so too. I think so too. I mean, I had a friend of mine who's been in China. He's an American. He's been in China for 30 plus years and knows it very well by, of course, by virtue of that. He said, Luke, as soon as Trump became the front runner last year, exporters started stockpiling cash. He said, most of the exporters I know have 6 to 12 months of cash. He said, can your consumers go 6 to 12 months with empty shelves? Can your businesses go 6 to 12 months with empty shelves? And that's what we're facing. And so, the state media last week in China came out and had a recommendation that they need to revisit Deng Xiaoping's on protracted warfare essay from 1938, which was after the Japanese had like run through there and been just slaughtering citizens.
Right.
So I don't get the sense that the average investor realizes that the Chinese might be digging in here and have the ability to take pain for maybe longer than we have, to your point. And then the question is, okay, well, what does that mean for markets? Are you saying sell it? I don't think that's sell stocks anymore. I think that is sell dollar, buy gold, because I don't think they're going to let it reflect in rates beyond a point
Okay.
and in the long run. And so then you're into this COVID too. It's going to accentuate COVID two economics, right? It's disrupt the supply chains, deficits go up, volatility suppression in the Treasury market goes up. We know what to do with that. That's dollar down, gold up, Bitcoin up, stocks up. Yikes, inflation up.
Well, I remember this is a weekly, 3 weeks ago. I showed people this chart, and this was a weekly candle when we had the low in the S&Ps. I said, would you rather be long a market with this candle or long a market with this candle? A blue candle or a red candle? So the market could do okay with all of this stuff going on. Do you think that we're setting up for new highs, Luke, or you think we're going to revisit this? I think they called it a 3 sigma event, um, some kind of sigma fraternity,
I,
right?
yeah, I think I think we're going to revisit new highs just because
Yeah,
I ultimately think, and I've changed my view. If you'd asked me this 2 weeks ago, I would have said, going lower.
yeah.
But, so some of it is watching what the markets are doing. But my view on it has changed with some of the commentary, et cetera, which to me is, I think we're now into COVID 2.0 economics. And
Okay.
I think it's going to be reflected more in the dollar and in the price of gold than it will be in equities.
Yeah, the dollar had a pretty weak response. Here's the The market had the best response in recovering. The dollar, this is its response, pretty muted. I think we
Very,
could maybe,
that's ugly.
yeah, I mean, it's like a dead
Yeah.
animal. I thought we'd get to 101, and then maybe we will, depending upon what happens this week. And then I'm looking for 94. But a lot of guys that I follow and that I look at the dollar, and that's just going to be the end of wave one down, Luke. So we could enter a period of on the dollar of let me just it'll complete this move that we had back in 22. All right, this was 16, 15, and from here 94 and 95 is equality, and that this will be the first wave down if you're a dollar bear, and if you're a dollar bull, this is an ABC, and we're going to blast. I'm in the camp that we'll just correct this fall from 94 to 110, maybe get back to 103 or so. But the dollar, there sure is a lot of pessimism in the dollar compared to 2 months ago. I hear it on, just news, CNN, Fox, everyone, oh, the dollar's a dollar. Pretty soon we'll see commercials from McDonald's where they'll go, the dollar's down. Makes it hard, makes it hard for me to, stay too bearish down here. I was
Yeah, I think
here,
it's yeah, I think it's in the short run. I agree with you that like the sentiment is so negative. But I'm not hearing anybody like on one hand, yes. Now go to those same people and say to them, the US has lost to China and
Yeah.
needs to retrench and reinvest and watch the reaction. They will tell you you're crazy. They will tell you you are anti-American. They will tell you you are a panda hugger, and they will curse you. I know this because it happens to me.
Yeah.
And that tells me,
There's
away from
plenty.
sort
Yeah.
of the short-term trading side, like I think the
Yeah.
dollar's going way lower. And oh, by the
Yeah.
way, there is no world in which we can accomplish what Trump and Bessent are trying to do without the dollar being a lot lower than 94, ultimately.
What will it take? 80,
I think
70?
below, I think below 80. Yeah. I think in the
Yeah.
70s and maybe in the 60s, 3 years out.
Yeah, I know of a guy that has those targets, 50s, 60s out there. That's a pretty big devaluation from what's already been a big devaluation. Um, I so let's talk just a little bit about anything out there geo-wise that you're concerned about.
Anything out
With
there, what wise?
uh geopolitically. Do you
Oh,
think that
geopolitically.
there's going to be a move on Iran?
I don't know.
Yeah, okay.
Yeah, I don't know.
You used to talk a lot about oil as being a
Yeah.
very important part of the economy. It's not just what you put in your tank. Can you explain to me, is it OPEC really just going for market share that they keep increasing production after a previous increase of production into a weak price structure? I actually think we might be bottoming here. But what's the point? Are they doing this to help President Trump out because he did talk about lower gas prices? But this is going to impede getting U.S. producers to go out, and there's no drill baby drill at 55 WTI.
No,
What do you think of oil?
So overall, I think oil is going to stay in a 65 to 85 range, and it's below the end of that range. So I think you could get a snapback. A reason I think that is for what you just said. I mean, last night you had two different oil producers saying they're cutting capex. Diamondback came out and
Okay.
said Permian's peaking and rolling over at these prices, which seeds the oil market going forward to Putin and OPEC.
This
The other
administration doesn't like that. I
Well,
just
and it's
know
one of
that they
these. Yeah, it's another one of these things where this administration has a number of things that are
conflicting.
contradictory to each other.
Yeah,
They
yeah.
can't, right? So like we want to reshore manufacturing. Great. At $50 oil, the ISM in the US is going to 40 to 45. The US manufacturing sector is going into a recession, followed by receipts, which will drive deficits up. And so now you're going to have higher upward pressure on yields in the 10-year. Besson says he wants to term out the debt. Well, at $55 oil, Saudi's going to drink his milkshake. Saudi's going to step in front of him and issue 10-year dollar paper. And I, quite frankly, probably be more inclined to buy 10-year Saudi dollar paper than I would American 10-year dollar paper. And it's probably a little bit of a yield pickup. It's certainly no worse credit risk. And so that's going to hurt his ability to term out that. The other thing I would tell you is if I wanted to get the dollar down really fast, I would start cutting U.S. oil production, right? If we go from if U.S. oil exports go down, think about what our trade deficit will be if U.S. oil production drops 20%. Dollar exports are going to explode higher.
Yeah. Okay. So they should call you and bring you into the cabinet, I think. And you know what? You don't have to call Luke, but you need to read Luke and consider subscribing. I learn every time I'm together with Luke. And at the minimum, just at least sign up here so you could. I'm just looking for Luke's. Here we do this. Here's the guy.
There he is.
And go and check this newsletter out. All right, and it's actually true because I'm a pro, and the noise is bothering me. And
it's very noisy.
It's very noisy. I guess I could put my earplugs in, but this is he provides great research. He's been right as far as asset allocation. And I think you're going to need guys like Luke more than ever because you can't just buy a spider and go out to the golf course for 3 years anymore.
No.
So, I appreciate you coming here all the time, Luke. And I know I could ask anything and I'll get an answer. And the questions I ask I want the answers too, not just for the audience. So appreciate it, buddy.
No, I appreciate you having me on. You've been a long time and early supporter, so I'm much obliged and I appreciate you.
Luke Groman, everybody. Follow him at a minimum on X and go to this website and check him out. And if you're confused about what's going on, and Luke's not a trader, but it'll help you get straightened out on some long-term holdings so that you could sleep at night. We all need our rest. Take it easy, buddy.
All right. Thanks, Dale. Thanks for having me on. Have a great one.
All right, buddy. So that's a wrap, everyone. You could join the team in 13 minutes on the Morning Edge. And hope you enjoyed Luke. So Luke says there is a possibility of that, and Blake's technical work today with TLT ended up being confluence for me. When I see someone I respect and maybe doing things different technically, coming to the same conclusion, builds my conviction. So anyway, guys, don't just count your pips, count your blessings, and take advantage. I think they're going to pull the offer soon. So if you want to be liberated, then you have to upgrade your hit rate. And I believe your hit rate's going to get better in the community. So adios, everyone. Have a great one. See you tomorrow. Bye-bye.